Your wealth deserves stability, expertise, security. Your wealth deserves LGT Crestone, private wealth with over a century of global heritage.
Welcome to the Global View on this Monday. Good that you could join us. Let's take a look at what's going on at a macro level. The Japanese yen dropping against the US dollar on Friday, and reports that the Bank of Japan is likely to keep its yield control policy unchanged this week. Data on Friday showed Japan's core inflation rose to 3.3%, exceeding the BOJ's target. Markets had been speculating the central bank could tweak yield curve control this week. And the Aussie dollar fell late on Friday, currently trading about 67.2 US cents. US Treasury yields, they were little changed on Friday following a week of mixed economic data ahead of the Federal Reserve meeting this week. The 10-year yield down to 3.84% and the 2-year at 4.85%. Meanwhile, Morgan Stanley has raised its US economic growth forecast for the year on signs of a strong industrial sector and more public investment in infrastructure. It now expects US GDP to grow 1.3% this year. And Goldman Sachs has reduced the probability of a US recession in the next 12 months to 20%. And in the UK, retail sales grew faster than expected in June, despite inflation running at almost 8%. Falling energy prices are expected to give consumers more disposable income. Well, as we mentioned, a mixed end to the trading week last week, but of course that comes ahead of key central bank meetings this week, including the US Federal Reserve and the ECB. Well, for his take on global equity market and where to from here, with an emphasis on New Zealand. We caught up with Brad Gordon from Hobson Wealth.
Well, I think towards the end of last week, we saw that NASDAQ rebalancing where the big 7 stocks were reallocated effectively, maximum weightings in the NASDAQ 100 of 10%. So that, I think, caused quite a bit of volatility towards the end of last week, which was outside of sort of macro drivers. This week, we focus on one, earnings. We've got a number of key companies in the US reporting, but two, the bigger one is the Fed Reserve, and whether they go ahead and raise rates whilst the shorter term trends on inflation are normalizing extremely quickly in the US. So it will be interesting to see whether they move that 25 basis points as the market expects.
Yeah, of course, and ahead of that, we did see tech stocks come off a little. What are your observations in the tech sector at the moment, given we had that narrow leadership driven by mega cap stocks? Do you feel as though perhaps the market's got ahead of itself?
The market's going to be very interest rate driven, I think, and one, the economies are proven much more resilient than expected. But two, there's just been no breadth in the US market this year. Maybe that rebalancing NASDAQ 100 is a start of things to come, but though that hasn't happened in 500. But what we do need to see is that breadth improving, and reporting season will probably help that. But we're seeing some early signs, like Johnson & Johnson last week, up strongly after its result. So if we see some more of those sectors outside tech performing well, then that will add to market momentum, I think.
Well, Brad, let's bring it back home, your side then. What are you seeing, particularly as far as where inflation is at the moment in New Zealand, and where to now for the RBNZ?
Yeah, it was last week's headline inflation number of 6% was somewhat disappointing for New Zealand. I think market expectations were 5.9% and Reserve Bank at 6.1%. So it sort of sits somewhere in the middle. But I think at this stage of the cycle, you want inflation staying to underwhelm expectations as opposed to sort of come out around expectations. Within that, it's the non-tradables, the domestic inflation, which was at 6.7%, which is just still too high, and that sort of leads into some political ramifications as we come up to an election.
How's that translating as far as the Kiwi dollar is concerned?
Well, saw huge volatility in the Kiwi dollar, went as high as 64 against the US dollar last week, and as we speak, it's around about 61.8. Um, so that's partly US data driven, partly obviously the Reserve coming out, meeting this week, and expectations of a raise coming through. But we're seeing a lot of volatility in that Kiwi dollar cross. And obviously that inflation means interest rates will stay higher. We have seen the forward swap curve stay higher, actually be quite strong. The 5-year swap rate actually nudged up to 5% a couple of weeks ago, has settled since, but is much stronger than it was, say, a month ago.
So, Brad, I guess the other issue is the fiscal side of policy at the moment, which is potentially up in the air given what you're about 3 months away from a general election there. What are the polls telling you, and perhaps how that may well disrupt fiscal policy?
The New Zealand election, is on 14th of October, so we're in that key zone now. Number of parties launched their election campaigns over the weekend. Look, the polls last week, there does seem to be a trend of an increasing gap and momentum towards the right, which is the New Zealand National Party and ACT Party alliance, for want of a better word, and as opposed to the reigning Labour government. Labour has got a sole majority at the moment. At best, they can hope for is a coalition with the Green Party and the Māori Party, which would be a huge swing to the left. What we're probably witnessing in New Zealand politics is a big gap in the middle. You've got ACT pulling national right, and you've got Māori Party, Green Party pulling Labour left, and we're seeing all-time low polling within those two majors, National Party and Labour Party. So it's going to be an interesting election, but at the moment, the momentum seems to be with the right.
Do you know what the key issues are likely to be? Is it, for instance, cost of living?
The two key issues, really cost of living, and that inflation number probably wouldn't have helped last week, particularly food inflation being so strong. Second one is probably crime, and the tragic shooting in Auckland on Thursday morning, and that he was on. Well, he probably should have been behind bars. It doesn't sit well with populists that Labour have campaigned on lowering prisoner numbers, and public safety becomes a major issue. That's certainly helpful for the Labour Party.
All right, Brad, well, let's focus then on equities, what you're seeing at the moment. What are some of the outstanding sectors you're seeing on the local bourse?
Yeah, well, one of the big themes I think we're seeing is the housing market looks to have bottomed, has found a level. Part of that is probably through immigration, and part of that is through the interest rates not going any higher from here. Somerset Group Retirement Village, they came out with a very strong quarterly update about 10 days or so ago, a record quarterly of settlements, which goes to show two things. One, obviously, is people being able to sell their house in order to buy a retirement unit. That speaks to the housing market. Secondly, it's just the demand profile, the demographic profile for these retirement villages is very strong still, and that underlying fundamental hasn't changed.
And elsewhere, E-Road, it recently rejected a takeover bid. What are you seeing there at the moment?
Yes, so the E-Road directors rejected an approach from Valaris, a Canadian-based fund company, who bid for all of the E-Road shares at $1.30. The board has rejected that number. There is talk now Valaris is going to come back with a higher number. Obviously, E-Road shares screen there are trading at $1.35, higher than the initial approach. So I think that's what we are starting to see some corporate activity particularly within this tech space, emerging tech space, as share prices have been absolutely hammered. E-Road's share price was as high as about $7, fell to as low as circa 70 odd cents. And so these approaches are very opportunistic on that basis.
So, Brad, What's the favoured portfolio positioning at the moment locally there, as we're sort of well and truly into the second half of the year, of course? Are investors being a little more defensive?
I think you're seeing investors come out of the woodwork. I think equities have I guess at least found a level. We're starting to see fundamentals remain reasonably strong. Some of these New Zealand tech companies are actually Vista Group and Serco Group both have had phenomenal runs this year. And yeah, so this and yeah, the next move on interest rates, whilst they may remain flat for some time, the next move is likely to be down. It's just a time issue.
Brett Gordon from Hobson Wealth in Auckland. All right, just before we wrap up, let's check where we're likely to open. And in just a couple of minutes' time, we can see SPI futures up 0.4%. Stay with us. The open is just after this break.